Natural gas futures continued their slide on Tuesday, plunging below critical support levels following a gap down from Friday's close. The failure to sustain key technical thresholds underscores a shift toward bearish momentum. Adding to the pressure, forecasts for milder weather and a distinct trading outlook among industry professionals have further weighed on near-term market sentiment. The weekend weather data trended colder for the last few days of January, showing a chilly weather system moving into the Midwest and East, leading to stronger demand. However, the data also indicates a warmer U.S. pattern arriving in the first few days of February, which caused disappointment in selling. Adding to the bearish sentiment, Freeport LNG announced on Tuesday that it expects limited vessel activity, while Port Houston stated that all its public facilities will remain closed through Wednesday as Winter Storm Enzo sweeps across Texas. The rare winter storm brought heavy snow, ice, and gusty winds to the U.S. Gulf Coast on Tuesday, a region where flurries are uncommon while much of the United States remained in a deep freeze. Meanwhile, the current market dynamic raises a significant question: have traders already accounted for the forecasted massive withdrawals of 242 to 307 billion cubic feet from natural gas storage? While these figures suggest a notable tightening in supply, the situation is becoming increasingly uncertain as preliminary data for early February begins to signal a bearish shift. If this trend continues, the current projection of a storage deficit of 136 BCF could rapidly reverse into a surplus within the span of just 1 to 2 weeks. Such a development would likely reshape market sentiment, potentially dampening the bullish narrative and exerting additional downward pressure on prices. This highlights the importance of closely monitoring upcoming forecasts and data revisions, as they could significantly alter the trajectory of natural gas markets in the near term. Last week's close at $3.91, after reaching a high of $4.35, formed a bearish reversal pattern that often signals the potential for further declines. This development warrants attention from traders, as it reflects weakening buying momentum and underscores the combined bearish influence of technical indicators and fundamental factors coming into play. Natural gas is poised to encounter further downward pressure, with $3.40 emerging as the next significant support level. However, the market remains vulnerable to volatility, as unforeseen weather shifts or a sudden spike in LNG demand could quickly renew buying momentum. At present, the sentiment leans bearish, making it crucial for traders to closely track weather forecasts and storage data to navigate the short-term outlook with precision. Please like, subscribe, and comment to support the channel. See you in the next one.